All right, let's dive into a really fascinating story unfolding at the crossroads of crypto and Wall Street. We're talking about a company called 21 Capital, and honestly, it's a real head-scratcher, a true billion-dollar puzzle. So let's get right to the heart of the mystery. You've got a company, right? And its main asset is this giant treasure chest overflowing with Bitcoin. You'd think its stock would be a pretty straightforward bet, wouldn't you? Well, it's not. Not at all. And the big question everyone's asking is, why the heck not? And when I say a giant treasure chest, I'm not kidding. We're talking about roughly 43,500 Bitcoin. To put that in perspective, that is a staggering amount of value, placing this company right up there with the biggest corporate Bitcoin holders in the entire world. This number, this is the bedrock of our whole story. So yeah, let's properly introduce the star of our show, 21 Capital. You can find them on the New York Stock Exchange under the ticker XI. They're a new face on the block, having just gone public through one of those SPAC mergers. And because of that huge treasury, they immediately became a major player. But, they're welcome to the big leagues. It's been anything but a smooth ride. Let's really look at this rocky start they had, because that's where we start to find the clues to this whole puzzle. So, check this out. Before they went public, the price was chugging along nice and stable, but the moment XXI debuted on the NYSE in December 2025, it just hit a wall of doubt. The stock tanked about 20% on its very first day. And sure, it's had a few little jumps here and there, but it's still way down. This was definitely not the grand entrance they were hoping for. So what gives? Why is Wall Street so spooked by a company that's sitting on what's basically a digital Fort Knox? Well, the answer really boils down to this deep, fundamental conflict between what the company has and what it says it's going to do. And this lays it out perfectly. On one hand, you've got this fortress of assets, that cold, hard, undeniable value of all that Bitcoin. But on the other side, there's this thick fog of uncertainty, just a ton of skepticism about whether their business plan is for real and if they can actually pull it off. It's a classic Wall Street battle, tangible assets versus future ambition. To really get what's going on with the stock, we have to look at both sides of the coin. So let's start with the bull case, the argument for why someone would be super optimistic about 21 Capital. Okay, so if you're a bull, you're looking at four main things. First, and this is the obvious one, is that massive Bitcoin-treasury. That's your safety net right there. Second, look who's backing them. Heavy hitters like Tether, Bitfinex, SoftBank, and Cantor Fitzgerald. That adds some serious credibility. Third is their vision, which is super ambitious. They want to build out this whole ecosystem of financial products. And last, they could be the first to really crack this new market space. And this quote right here, it gets to the absolute heart of their whole plan. They don't just want to be a digital vault, okay? The idea is to build an entire suite of services. We're talking brokerage, lending, and exchange, all built around Bitcoin. They want to be an active, breathing tech company, not just a passive fund holding crypto. That distinction is everything. All right, so that's the sunny, optimistic side of the story. Now let's flip it over and look at the other side, the case for being cautious. This is the argument that seems to be really dragging the stock price down. The bears, or the skeptics, they have their own checklist of worries. Right at the top, a really unclear business plan. When they launched, there were almost no specifics on how they were actually going to make money. Then you've got leadership turmoil, a CEO leaving, a lawsuit. That stuff makes investors nervous. Throw in a weak crypto market and the lingering risk of more shares flooding the market from the SPAC deal, and you've got a recipe for doubt. The whole bear case, every single one of those points, really just boils down to this one simple question. It's awesome you have billions of dollars in Bitcoin, but can you actually turn that into a real, profitable, sustainable business? Right now, the market's answer seems to be, we're not so sure. So this brings us right to the core of this whole puzzle. We're going to decode the discount, this weird financial situation that explains why the company's stock is actually trading for less than the value of the Bitcoin it holds. It's kind of wild. So to get this, we just need a quick definition. Net asset value, or NAV. The easiest way to think about NAV is it's the company's on-paper worth. You take everything it owns, which for XXI is almost all Bitcoin, you subtract everything it owes, and what's left over. That's the net asset value. It's the baseline for what the company should be worth. And boom, here's what that looks like in the real world. That bar on the left, that's the theoretical value of all their Bitcoin, their NAV. The bar on the right, that's what the stock market says the whole company is actually worth. And as you can see, there is a pretty big gap there. The market is valuing the company at less than the sum of its parts. And that gap, that is the discount. It's not a mistake. That discount is the market's way of saying something. It's Wall Street literally putting a price tag on all that uncertainty and execution risk we just talked about. The leadership questions, the unproven business model, it's all baked right into that gap. So, at the end of the day, this is the dilemma for any investor looking at this thing. The bull story says you've got a company with a massive safety net of assets, powerful friends, and a chance to be a pioneer. The bear story sees an unproven business with shaky leadership that's trading at a discount for some very, very good reasons. And you know what? Both sides have a point. The crucial takeaway here is that the entire story of 21 Capital is really just a big battle. It's a fight between the hard, cold reality of its incredible balance sheet and its desperate need to prove to a very skeptical world that it can be more than just a pile of digital money, that it can be a real, functioning, money-making business. And so that leaves us with the million-dollar or, I guess, billion-dollar question. How do you see it? Is 21 Capital a golden ground floor opportunity to buy a bunch of assets for less than they're worth? Or is it a super high stakes bet on an unproven company in a very shaky market? The answer to that is going to write the next chapter of this incredible puzzle.